Hey there, welcome to today's video. Let me jump right in there. Alright, let's get started. In 2021, the GameStop stock was regarded as the most heavily shorted stock in the stock market, an opportunity Reddit traders were quick to notice and took advantage of. It is still believed by most Reddit traders, stock analysts, and GameStop enthusiasts that another short squeeze is bound to happen. But this time, it might take the stock price as high as $1,000. How would that happen? Why would it happen? And how soon? Let's find out. But before we do that, don't forget to like and subscribe whenever you feel like it, as this is the best way you can show appreciation for the videos that we produce. Thanks a lot, my friend. The price of GameStop stock will soon attain the historic high it achieved during the peak of the volatility of its meme stock. The majority of the stock's steady increase can be attributed to GameStop's preparation to announce its quarterly earnings, as well as Ryan Cohen, who becomes officially elected as the chairman of the board. After the company's stock in 2021 attained a historic high, it plummeted so far below $60 per share, and as the day increased in numbers, the stock reduced in value, falling below $41. Soon after this, the price of the stock rose to $260 as a result of biddings made by retail investors and enthusiasts of GameStop stock. But then, the stock fell below $144 towards the end of August and the beginning of September of 2021. There were clear signs that GameStop stock was struggling, but they were still able to experience a difference in price per year before and after their quarterly earnings report. You can attribute this play with stock prices to the few investors and stock analysts who still keep up with GameStop stock volatility. But how does this explain the part that GameStop's quarterly report has anything to do with the price going up again? From its history around March 2021, the company was getting ready to announce the worse than expected earnings of its 2020 fiscal earnings. During that time, the price of the stock went from about $182 to roughly $120. So the company in just a single day lost a third of its value. This must have been very heartbreaking for investors holding GameStop stock, but it wasn't. It was a victory for them. The very next day after the flop, from $181.75 to $120.25, the stock price went back to $183.75. All of this happened within 24 hours. So if it takes GameStop stock 24 hours to gain back a third of its stock value, how many days will it take for it to get to $1,000? In stock prices, mathematics doesn't work that way. You don't just add a number to a number to get a definite value. You need to cross-check, subtract, divide, and divide some more. But one thing is certain. These figures show clear evidence that the price of GameStop stock is in no way limited to the daily fundamentals of its retail business. Even though retail investors might play a good part in taking its price to $1,000, as long as they remain excited and enthusiastic about the prospects for GameStop stock. One of the reasons for the exuberance and excitement could be Ryan Cohen, the officially elected chairman of the company. Did you remember how we mentioned he was somewhat connected to the reason the price of the GameStop stock could hit $1,000? Ryan Cohen rose to become the chairman of the company in less than a year after he acquired 10% of the company's stake. Although it was expected for quite some time, it only became official after elections during a stakeholder meeting. Ryan came to GameStop to move it to incredible heights. He gestured toward his ambitions of building a very powerful e-commerce platform that will offer a competitive pricing environment for clients as well as develop a broad game selection and fast shipping and delivery services. These features, when put in place, will attract more customers, boost the company revenues, and grow their stock price. Ryan also believes it is possible because they have a special group of investors that are holding the company's shares. But what's the role of this special group of investors in skyrocketing the price of GameStop stock to $1,000? Ever heard of a bull thesis? Well, this special group of investors helps to support the GameStop stock bull thesis. It might not be visible to you, but lots of investors and analysts see Ryan Cohen as a potential savior for the struggling company that could move the stock price significantly. Apart from the moves made by management, other factors can contribute to taking GameStop stock to $1,000. An example is a short squeeze. But for GameStop stock to reach a $1,000 price, an incredible event like that of 2021 needs to happen again. Not just a short squeeze, but a combo of gamma squeeze and short squeeze. Although these two feed on each other, they are both fueled by the same thing, And in the case of GameStop stock, the culprit is the loosely speculative frenzy that is orchestrated by millions of small or retail investors through Wall Street bets from the Reddit channel. Is it possible for another event like that to happen again? Yes, sure, maybe. But one way to know for certain is to go through the mechanics and analytics behind the short and gamma squeeze of GameStop stock. Let's believe the majority of you know what a short squeeze is, but if you don't, we always have you covered. A lot of investors understand the concept of a short squeeze, but some don't. If you own or loan stock, the most you can lose is the total amount you put into the investment. And as long as you are not using a margin, your stock can belong to you for as long as forever, and you can't be forced to sell, except you want to. But there are cases when the stock becomes undervalued. In those cases, you can appreciate the stock, hold it, and wait for it hopefully to rise. But when you short a stock, the basis of how this works is quite simple. When you feel the stock is becoming undervalued, or the price is falling, you can borrow shares through your broker and sell them instantly. While doing this, you have the plans of returning the shares to your broker by buying back the stock at a much lower price, while pocketing the difference. The main difference between owning a stock and shorting a stock is in terms of your gains and losses. While your gains in shorting a stock are capped, the losses you can experience are unlimited. A lot of investors are afraid of these kinds of losses, so they are forced to sell. And whenever a highly shorted stock starts to rise, it can easily become a buying frenzy, as short investors try to cover up their losses and leave the trade. In case you didn't know, it causes an increase in the stock price, but only for a short time. Imagine this happening again with the GameStop stock. Gamma squeezes, on the other hand, are caused by the increasing popularity of options. The mechanics of how it works are different from that of short squeezes, but they have similar themes, which is causing forced selling and buying, a feedback loop, and an increase in stock prices. This phenomenon is achieved with a great deal by play from options market makers, which are like bookies, but with an ultimate desire to make money from creating a market while staying neutral on the stock. This action can generate as much frenzy speculation as a short squeeze would, and encourage more forced selling and buying and an accompanying increase in stock prices. For GameStop stock to experience these, and possibly reach $1,000, it has to be heavily shorted. Why? After the pandemic, demand for retail games sent the stock of GameStop skyrocketing, so much so that it saved the company from bankruptcy, as most investors and analysts choose to believe. The truth is, while this was going on, short sellers were in the background, driving stock short interest to more than 100% percentage float, which acted as a catalyst for the short squeeze. At the time of producing this video, the stock had a short percentage float of 26.62% and a 16.17% short percentage of shares, both of which are high enough to pull another short squeeze and drive the price of the stock to almost $1,000. There are several reasons why GameStop stock can reach $1,000. One of those is the utilization rate of the stock at maximum levels consecutively for 21 days. If this ever happens, it might lead to a buying frenzy, or lenders recalling their share, which prompts a short squeeze. However, short investors and sellers will continue to short the stock and boost its price. The stock will then have high demand, which plays to squeeze more shorts out of their positions. This would provide an opportunity for GameStop stockholders to earn lots of money as the stock rises. But then, short sellers are still shorting the stock, and if it continues, GameStop's stock utilization will shoot. Although some short sellers are still holding GameStop stock, they will soon close their positions, and the stock will rise. Did you also know that GameStop has in the long run proven to be sensitive to market fundamentals and trends? The stock has a high level of uncertainty, which might hurt the sentiments of investors generally, and increase the profitability of GameStop stock. Another reason why hitting $1,000 is possible is GameStop stock's short interest. GameStop stock short interest at the time of producing this video is high, way more than 20%, which is considered extremely high. But why does it matter, and how does it relate to the stock hitting $1,000? The short interest of a stock is a percentage or number of the stock that is not yet covered, meaning the possibility of squeezing shorts out of their positions is very high. GameStop stock has a high short interest. Therefore, there is a possibility for another short squeeze, and a potential of it getting to $1,000, as not all their stocks have covered their positions. Another reason GameStop stock will hit $1,000 would be the stock shares on loan. As this value increases, so does the number of shares needed to be covered. Also, with institutions holding about 28.62% of the stock, it shows that the possibility of hitting $1,000 is high because there are enough short sellers. So yes, GameStop stock can hit $1,000 for a single share. This is backed by data from Stonko Tracker, which shows an increase in percentage of dark pool trading of GameStop stock. Who wouldn't want to buy or own a stock with a bull thesis behind it? With a number of informed and well-equipped investors, as Ryan Cohen mentioned, who are ready to ensure the price of the stock soars. So what do you think? Do well to let us know in the comments section below. If you liked our video, then go ahead and click on the thumbs up, subscribe, and the bell icon to get notified of our new and upcoming videos. You can also check out our other videos. Goodbye.